So today we're going to spend a little bit of time talking about the 6 standards in our personal financial literacy unit. These are all supporting standards, and because of that we've touched on the main one, 510F, in an earlier unit with our adding and subtracting decimals unit, because 510F, balancing a simple budget, is all about working with money to balance a budget, and what better way to do that than adding and subtracting decimals. So there are 3 that we have left to cover before STAR, and then 2 that we will cover after STAR because they're not part of the assessed curriculum. So let's start with 510A. This one is all about defining. Our student verb is define, and they have to define several things. The first thing they have to define is 4 kinds of property taxes. So we are defining income tax, payroll tax. Kids tend to mix those 2 up, so let's make sure we know the difference. Income tax is annually. Payroll tax is every time you get paid. So those are the first 2. And then the second 2 things kids need to learn about in this unit, or be able to define, is sales tax, which is what we pay every time we go buy goods. So kids can usually relate to this, especially if you've had the book fair on your campus recently, when they pick up a book that says it's $6.99, and then they get up to the register to check out and it's $7.50-ish, somewhere around there. They don't realize until it affects them personally what sales tax is. But after the book fair, if they've bought goods, then they know what sales tax is. So this is a tax that we pay when we're buying goods. And then lastly is property tax. And property tax is paid annually, and this is paid on property. But here's the problem. Kids don't know what that means. They think everything is their property, and so that it's paid on everything. But property in this case is homes, land, buildings. That's all that this standard requires of students, understanding the definition of those 4 types of taxes. Now, we typically combine that with 510B because it's also one that's got some new terms that students have to define. But the verb in 510B is explain. So a little bit different. It's not a define teak, it's an explain teak. And what are we explaining? We're explaining the difference between gross income and net income. So we have to know the difference between gross and net income. So we have to know what they are before we can know the difference between them. Gross income is my earnings before any taxes or deductions of any kind. Earnings before deductions. And they need to know what those deductions could be. I could have deductions for a retirement plan. I could have deductions for health insurance. I could have deductions for all sorts of things. I know I will have deductions for payroll taxes. That's the connection there. So that's gross income. Net income is my earnings after all of my deductions have been taken out. So we think of net income as our take home, what I get to take home after my earnings. So this is my take home pay. So this is after deductions. So these 2 are usually good to combine in instruction, just because we're learning about definitions of things. We can make the connections back to payroll taxes. We can understand that our income taxes is something we pay annually based on our annual gross income. So there's connections here that we can make as we're learning to define. But remember, 510B, my verb is explain, not just define. So I do have to define them to understand them, but I have to take that farther than just define. I have to explain the difference between the two. Okay, next we're going to talk about 510C, and I put a little asterisk beside this one and beside 510D. And what does that asterisk mean? That asterisk means that these two TEKs are not part of the assessed curriculum per TEA, part of state's assessed curriculum. Does that mean we don't have to teach them? No, it doesn't mean that. It just means that we're going to teach them after the STAR test. So we're going to teach them after our state test because it's not part of the state's assessed curriculum. So if you look on your pacing calendar, you will see that 510C and D are after the STAR test for this very reason. So 510C, this is where students are learning to identify advantages and disadvantages of different methods of payment. So understanding the advantages and disadvantages of paying with cash or paying with a check or a credit card or a debit card. And electronic payments are also listed in our standard. So we're looking at advantages and disadvantages. So this is a good brainstorm. It's interesting conversations come about when you hear students talk about the advantages and disadvantages of different forms of payment because they've had conversations or heard things about this at home. So brainstorm ahead of time for yourself. What are the advantages and disadvantages of payment with a check? Specifically in the TEK are these four things: check, credit card, debit card, and electronic payment. Now, I always threw in there a conversation about the advantages and disadvantages of cash because we have to think about what our population is used to seeing. Some of our families pay cash only. That's the way that they handle their finances. And so in order for our kids to have an entry point into this conversation, it needs to be something that's relatable to them. So I always brought in the cash conversation. Kids understand the advantages and disadvantages of carrying cash around and paying with cash. So that's a way that they can have a part in that conversation that's relatable to them at this stage in their life and in some of their family conversations. Then we also want to talk about 510D, which is developing a system for keeping and using financial records. Develop a system for financial records. So we can talk about how does the bank keep records? Why would we need to keep financial records? How does that benefit us? What kind of system would help with that? Those are the conversations involved in this standard. Now, 510E is one that we have talked about in our prior unit of the same one that we talked about with 510F. So 510E is when students have to explain what would they do when their budget is not balanced. So when expenses exceed income, what are choices they have to make. So this is simply describe actions. That's what we have to do. So we're describing actions needed when a budget doesn't balance. Now, this specifically says, what do we do when expenses exceed income? So when expenses are greater than income, what would we have to do? What choices would we have to make? So we tied that in to 510F when we learned about balancing a simple budget. That brings this conversation back. What does that mean? If expenses exceed income, I have to make choices. So this ties to needs and wants. What are things that I have to have for survival and what are wants? And then how do I make choices when my expenses are too much. This ties great to this conversation because a lot of kids understand credit cards and how that could help when your expenses exceed income, but there's a distinct disadvantage to that because that comes back having to pay it with interest. So these two tie together well. Once you've taught this, after we've taken our test and you're having this conversation, this ties well back to, remember when we had to figure out what to do when our expenses exceeded income? How many of you have seen a situation where a credit card was used for that? And what are the disadvantages to that? So you're able to tie those two conversations together. And then 510F, our last standard in this unit, balance a simple budget. We taught this way earlier in the fall when we were learning to add and subtract decimals, because balancing a budget, we're working with money, so we are adding and subtracting decimals. So we've taught this already when we did addition and subtraction of decimals. It needs a review. It needs some time to remind and practice again. This is a great skill to practice. It's a great opportunity to practice this skill as you are talking about it. So there's a really important thing to remember for these two standards. In order for a budget to balance, it means a specific thing. A balanced budget doesn't just mean my income didn't exceed my expenses. A balanced budget means my expenses and my income are equal. My income equals my expenses. And you're thinking, well, my income never equals my expenses to the penny. No, it doesn't. But in order to create a balanced budget, those two things have to be equal. So the choices that we make typically involve what happens when you have more income than expenses. Well, then you're able to make decisions about things that are needs, not wants. Sorry, I said that backwards. You're able to make decisions about things that are wants, not just needs, and you're able to put money in a savings. So we could have an other category on a budget that allows us to have other expenses that may not be required needs-based expenses, those wants, and we can have a category for savings so that my income equals my expenses. This is what kids need to know about a balanced budget. Income equals expenses. So whatever decisions I have to make in order for my budget to be balanced, my income has to equal my expenses.